Good morning, guys. Welcome to Mug Briefing. Right now, two of the world's biggest chip makers are quietly telling some customers in China to expect longer waits for critical server processors. And that matters because those chips sit at the foundation of the global cloud and AI economy. In simple words, Intel and AMD are reportedly struggling to deliver certain server CPUs on their normal schedule, and the ripple effects could reach far beyond China. The story comes from an exclusive Reuters report published on February 6, 2026. According to Reuters, which cited people familiar with the matter, Intel warned some Chinese customers that delivery times for certain server CPU models could stretch as long as 6 months. AMD told some customers that lead times for some of its server products have extended to about 8 to 10 weeks. These are not all products and not consumer PC chips. The reporting focuses specifically on server CPUs, the processors used in data centers that run cloud services, enterprise software, and large AI workloads. This was not a public press conference or a formal announcement of a shortage. It was described as notices sent to some customers in recent weeks. Reuters says the information came from sources close to the transactions. That means the core facts, the 6-month Intel figure and the 8 to 10-week AMD figure, come from unnamed sources, not official company statements. Reuters also reported that prices in China for some Intel server products have risen more than 10%, according to a source, though pricing varies by contract. The companies provided only limited public comment. AMD emphasized it continues working with customers on supply. Intel has separately said it expects supply conditions to improve in the second quarter of 2026. Neither company publicly labeled the situation a shortage. The delays are not described as universal. They appear tied to specific server CPU lines, with Reuters reporting that Intel's 4th and 5th generation Xeon processors are especially affected. The coverage names major Chinese cloud players such as Alibaba and Tencent among customers identified by sources, but again, those connections come through reporting, not on-the-record confirmation. We don't have evidence that most of China's market is frozen. What we do know is that some large buyers are facing longer queues. Why this is happening now likely connects to a collision of demand and manufacturing priorities. The global tech industry is in an aggressive expansion phase for artificial intelligence infrastructure. AI systems require enormous computing capacity, and chip production lines are finite. Foundries, the factories that manufacture advanced chips, have been allocating more capacity toward high-margin AI accelerators and memory components. At the same time, coverage says customers have already been accelerating purchases out of fear of rising prices and future scarcity. When buyers rush orders, it can create self-reinforcing backlogs. In other words, anxiety about supply can tighten supply even more. There is no confirmed evidence in the Reuters report that export controls or political restrictions directly caused these particular delays. The root cause is not officially documented. Reporters are describing the outcome, longer lead times, and connecting it to broader industry pressure. That distinction matters. This is a supply squeeze signal, not proof of a systemic manufacturing breakdown. What this likely means is that the server market is entering another period of tight allocation, at least regionally. When supply stretches, vendors prioritize large contracts and high-value customers. Smaller buyers can get pushed back in the queue. Prices in spot markets tend to rise. Resellers can benefit. Competitors using alternative chip architectures may find openings to pitch substitutes, but it does not automatically mean production has collapsed or that a global chip crisis is back in the way consumers remember from the pandemic era. This appears narrower and focused on certain enterprise chips. For Americans, the impact is indirect but real. Data centers are global systems. U.S. cloud companies buy hardware from the same supply chains that serve China. If inventory is being rationed in one region, it can change how manufacturers distribute chips worldwide. That can slow the rollout of new computing capacity, especially for AI services that require massive server installations. Slower capacity growth can translate into higher infrastructure costs, which can eventually feed into cloud pricing, enterprise software contracts, and startup budgets. Most consumers would not see an immediate price spike in their phone bill, but large technology projects could become more expensive or slower to launch. Investors also watch these signals closely. Supply constraints can cut both ways. They can limit how many chips a company can sell in a quarter, but they can also support higher pricing. Markets tend to react not just to shortages, but to how companies communicate their ability to manage them. At this point, the information comes from reporting, not earnings guidance. That keeps it in the category of early warning rather than confirmed financial impact. What happens next depends on whether this is a short backlog or the beginning of a longer imbalance. Intel has publicly pointed to the second quarter of 2026 as a period when supply conditions should improve. If that holds, lead times may stabilize within months. If AI demand continues accelerating faster than production capacity expands, delays could spread beyond China. Customers might pre-order even more aggressively, which risks another cycle of panic buying. Governments generally step in only when shortages threaten national infrastructure, and we are not at that threshold based on current facts. It's also important to be clear about what this does not mean. This is not a confirmed global chip crisis. It does not mean Intel or AMD are failing operationally. It does not signal a collapse in semiconductor manufacturing. Consumer PCs are not reported as affected. The issue is concentrated in specific server processors and reported through supply channels, not declared as a company-wide emergency. The story would become more serious if delays began appearing in public distributor data across the US or Europe, if large cloud providers openly warned about capacity limits, or if either company revised earnings expectations because they could not ship enough chips. Those would be signs the constraint had moved from a regional bottleneck to a structural shortage. For now, the clearest takeaway is that demand for data center computing is running hot enough to strain parts of the supply chain again. Reuters reporting shows how tight modern chip logistics have become. A surge in AI and enterprise demand in one region can echo across the global economy. Intel and AMD are not announcing a crisis, but customers are being told to wait longer. And in a world built on instant computing, even a few extra months of waiting can reshape how companies plan their technology future.